All right, so I'd love to get an idea. By the way, I'm Phil Town. I'm really happy to be here and with a very distinguished panel. That was a pretty interesting little show we got to see on YouTube. This is Shannon and Gavron right here. Would you guys give them a hand for just being here? Let me ask you a question real quick. How many of you are interested in getting capital for your business? Show of hands. Raise them up real high. So looks like pretty much everybody in the room is in that ballpark. I've come into running a hedge fund originally from the private equity and venture capital world, angel capital. And I got to tell you, I found it a lot easier to run a hedge fund than it is to do angel capital because it's really a tough thing to decide which one of you guys is actually going to be successful. That's a really hard question. And these guys up here have figured out how to interface into that question and be able to provide you capital. We're going to talk about what it's going to take to do that, where they're getting their capital from, what it costs them to get it, so what are they going to charge you, if anything. Do you guys charge anything for capital, by the way? Just a small piece. And we also want to know, what else would you guys like to know? So we're going to go for about 30 minutes here, kind of have a free-for-all, and see if we can't get out the information about what each of these companies does, and from Shannon and Gavron, your side of the things about how easy or tough this can be. And then we're going to have about 15 minutes of Q&A. So get your questions ready because we really want to get questions up here and redirect our attention to the things you haven't heard yet. So let's get started with you two, huh? We got a couple of successful entrepreneurs. Shannon, yes. You run 3 salons here.
Yes.
And you had 2 pretty well underway. And then you said, all right, we're going to expand.
Yes.
And this time we're going to do it with somebody else's money. Okay, tell us about that. How hard was that to figure out where to go find the bucks? Did you just go down to your local Wells Fargo bank and get a loan?
No, it's not that easy to go just down to your local Wells Fargo bank. But my husband and I, we did decide to just sit down and say, okay, we looked at a couple of SBA loans and said, well, okay, you know, you kind of narrow it down from the SBA loans to the different banks. And we decided to go to BB&T. And at that particular time, we didn't think, well, we knew that it was close to Wells Fargo size, but we just figured, okay, well, we'll try BB&T because we've heard that they've given out small business loans and they have an SBA program. But unfortunately, they were not able to help us.
Why not? What was standing in the way between a traditional loan and you?
Well, it was really something very, very small. I think they wanted us to have a little bit more capital as far as assets is concerned. Mm-hmm. And so I think just with that, because everything else was fine. You know, we had been in business long enough. We had the credit was fine. But I think it was just other things that they were looking at that kind of just said, okay, no, we can't do it. But the loan officer,
how much, at this point in time, how much were you looking for?
Well, we were actually looking for just on like $20,000.
About $20,000 bucks?
That's it.
And sometimes that can be a barrier, perhaps, between a traditional lender and the entrepreneur. You want too little. You should have gone and asked for $1 million.
I could have. Matter of fact, thank you. I'll go back and ask for half.
That's what I'm talking about.
We'll do that.
All right, so, so BB&T probably very politely says no. Okay?
Yes, they politely said.
All right, and then what happened?
And then our loan officer, he called my husband and he said, I have someone for you, especially for you, the needs that what you're trying to do with everything. I've looked over all your paperwork, saw absolutely, really nothing wrong with it. You need to try this company. And that's what we heard of ACE.
Can I just say something real quick? What you're going to find, I think you guys tell me if I'm wrong, but there's an incredible amount of kind of, I don't know what's the right word, friendships, interaction in your industry between people who are lending it to a certain size niche to those who are lending a different niche. And man alive, I mean, we found out all of you guys are interactive. You are all willing to talk with each other. And it seems like pretty much willing to help out entrepreneurs like Shannon by saying, look, it might not be right for us, but I'm not just going to send you out the door. I'm going to help you find somebody that's kind of, you know, point you in a direction, okay? And we'll come to Brock here in a minute, who has built a business that's all about that, all right? But I want to get more of your stories first. So, okay, you heard about ACE, which is Grace over here. And you guys walked over and knocked on the door.
We actually called, and they were very, very nice. We didn't walk over and knock on the door, but they made it very...
sort of figuratively.
Okay. But they were very friendly, and they were actually able to look over the paperwork, and it was just easy. It was smooth. We didn't have any complications or problems, and we actually were able to close quicker than actually a larger bank.
Well, real quick, Grace, what made Shannon a good loan?
Well, you can already see what made her a good loan.
Yeah,
besides that,
I'm going to get her some hedge fund money pretty quick. But go ahead, tell us.
She met the criteria for cash flow and for collateral. Because even though we're an alternative lender and we don't have the same requirements as a bank does, we do expect people to have collateral. So we might take inventory or vehicles, something like that.
Well,
and then her business was doing well. I mean, that's the other thing that's significant.
You guys are a nonprofit, though, right?
Yes, we're a private nonprofit.
And you do a lot of things other than lending for entrepreneurs?
Yes.
All right, why don't you tell people what you're doing here?
Yes. What we do is we grow the businesses and we couple our loans with business advisory services. I mean, we have special staff that's what they do.
Do you got to pay for that? For the advisory service, or
no?
No.
No, that's part of our service. I mean,
so you guys writing this down? ACE equals free. Okay, write it down. All right, keep talking. What do you got?
I don't know if it's quite free. The nonprofit is.
Come on, you're nonprofit, man. You're not going to stick
It's not a mission statement. It's a tax status. You know, and there is confusion about the nonprofit.
I do get confused. I want the nonprofits
wait
free.
A minute. The nonprofit means that we don't pay shareholders. What it means is that anything that's profit goes back into the business, so it goes back into helping the communities that we serve and to the entrepreneurs.
But we do get free stuff.
Somebody's paying for it.
Well, that's fine, as long as it ain't me.
Yeah, you get a free Southern smile.
So you've got access to coaching, mentoring.
That's correct.
And that stuff.
And some of that is volunteers, but like interns, and you know, we coordinate them. But we also get some money. We borrow money from the Small Business Administration. And when we borrow it from the Small Business Administration, then there's some money that comes with it so that we can provide that business advisory service.
And you guys weren't scared away by the little amount that she wanted, only the $20,000?
No.
That was good?
You know what? That's the sweet spot for what's called our microloan program. In this country, those loans are $50,000 or less. But for our particular program, that sweet spot is going to be about $20,000.
Okay, curious. How many of you guys, $20,000 would help a lot? Show of hands? Okay, cool. About half, something like that.
And then our other, for our larger loan.
Y'all got more money?
Our larger
How many of y'all want more money? Show of hands? Okay, more money.
Our larger loan program, the sweet spot's going to be about $150,000.
How many of you, $150,000 would get the train moving down the road a little bit? How many of y'all want a lot more than that? Show of hands? What are you talking about? We're talking about serious money here. They'll be like, I want $1 million. But what about
these guys?
Oh, these guys? You guys can do $1 million?
No. Yeah, we're up to 100,000.
We're alternate lending here. Yeah. So you got to go by steps, right? You got to build it up. 20,000, big first step. You guys nailed that down. How long did that take you, Shannon? From the time you called her and got the money, how long?
About 2.5 weeks. 2 weeks.
Excuse me?
About 2 to 2.5 weeks.
2.5 weeks?
Yes, it wasn't long at all.
Is that like completely weird, Grace? Was that like a totally weird case, one-off, 2.5 weeks was bizarre? Usually it's 7 months.
No, I would say about 2.5 weeks. We try to make the smaller loans 2 weeks.
Man.
We don't want it to be any longer, but because we invest the time in people, we've got to make sure that we vet them completely and know them. And then you'll see as you go ahead and talk with Gavron that once you know us and we know you.
So you do know Gavron.
Oh, yeah.
Oh, yeah.
So Gavron, you got the money from Grace too?
She did my loan in a week.
But that's after, I mean, we already had a relationship.
Right.
So, I mean, mostly you don't hear people talk about character anymore. And it's cash and collateral repay loans.
Yeah.
But with a program that's like ours, once we make a loan with you and get to know you, then the character, we can move things a lot faster.
Okay, so it moved it in a week for you.
Exactly a week.
So from the time you decided you wanted to go after capital to change your business direction,
Well,
or had
this
you
is
already
just
changed the business
This
direction?
was just my last loan last week. I have, what, 3 different loans with you?
Oh,
Yes.
you just kept going back to the well.
I did.
Okay. Grace, you're going to win big time out here. Everybody here's just going to forget the rest of these guys. I'm not even going to let them talk. Steve, what do you got to say over there, man?
I think there's a misperception, generally speaking, about the speed at which alternative lenders, like the people on this panel, operate. You know, like Robert and myself, we do $5,000 to $500,000, and it takes us, on average, probably at the outside a week to underwrite and check all the references and do everything that we can. And the speed that, and I don't want to speak for Robert, but Robert runs a great company, and we do business together. And he can turn stuff around in a day. We can turn stuff around, in a matter of hours or a day or two, especially when someone needs money a second or a third time. It's normally, but most of it's based or premised on how much information the borrower or the customer has ready and how prepared they are to come talk to someone like us.
Well, Gavron, how prepared were you when you walked into Grace's place? Did you?
Well, I called too. I didn't go walking in.
Dang it, nobody walks anymore. Okay.
I did my homework, and I think I had everything and probably more than they wanted.
All right, tell us briefly, what was the situation of your company that made you able to get capital? What did you have going for you?
Well, I'd been in business for 2 years, and I actually got my first loan through SunTrust.
Okay.
And it was an SBA loan, and they did interest only for 2 years, and then rolled it over into a 5-year note.
Now, the SBA loan probably took, what, a week?
No, with SunTrust, it did take a little bit longer.
Okay, keep going. Keep going.
But they wouldn't loan working capital.
Uh-huh.
They wanted just machinery and inventory, and so that's where ACE came into play. They gave me a loan for working capital.
Okay, so the original loan from SunTrust was for what kind of
$100,000
And it was for what?
for inventory and machery.
Okay, so you guys know the difference between like capital,
Working capital,
and
right.
working capital. Is everybody clear about that? A lot of you are not. Working capital is working capital. It's working. Does that help?
It keeps you in business.
Okay, what the hell's working capital? What is it?
It pays the bills, You have the loans, and you're starting your business, and you need working capital to, buy the inventory, pay your employees.
Oh, that kind of capital.
Yes.
Okay. All right, so you needed that.
Yes.
They didn't want to do that. And how'd you figure out about Grace?
I went through the SBDC here in Atlanta with Peter Russell, and he hooked me up with Grace.
Nice.
Yeah.
All right, cool.
And it's a free service, and it's like having a free consultant.
Okay, Steve, what about her situation would intrigue you as a lender? Would you be interested in having her come and knock on your door? I mean, figuratively speaking? Yeah. I mean, she's really just going to call.
She could call us. She could come online. She could visit us any number of ways. But we'd love to do business with her. I mean, anyone that's been in business for a minimum of 3 to 6 months that can illustrate that they have a track record of being positive and being successful in business, whether in this business or another business, right? We, unlike SunTrust, we are an uncollateralized transaction. So we're technically, our core product is not a loan product. We give someone $1 and we buy $1.20 of future revenues, credit card sales or bank deposits or revenues, and we generally take a fixed percentage, an agreed upon fixed percentage of their future sales until we get the $1.20. Right? So if someone's sales go up, we still get, say we agree upon 10%. If someone's sales go up, we get paid back more quickly. If there's seasonality or cyclicality or business just goes down and they can afford to pay less, then we collect less. And that's the risk we run. So we're a little different than a traditional lender, right? Because we're not necessarily worried about someone's net income. We're getting paid out of gross sales. So we're tracking which way
That's kind of cool. So you guys are you guys are, how do you get paid out of gross sales? Where do they have to write you a check every day, or what's going on?
No one writes us a check. So generally, we get information or access to someone's either bank account or credit card processing data, and that either gets pushed to us or we go and pull it from somewhere, and then we do a calculation and we create what's called a notcha file or a debit, and we debit the money out. Like if anyone has automatic billing for their mortgage or anything like that, it just gets debited, and we get paid back.
So the fact that you basically make an arrangement with these guys to kind of partner with them on cash that's coming through, you're taking a little piece of it, they're taking the rest of it and running their business, that lets you get around the collateralization issue? Collateralization meaning, right, you got to put up your Harley or something. Right. So this gets you around that.
For sure, because we're looking at someone's cash flows, and we're looking at their gross revenues, and we're just making sure that the amount of the gross revenues that we're going to take from them is not going to stifle or hurt their business.
But what if it's all not just sweetness and light? I mean, business goes up and down. We've gone through a bumpy recession. What if the numbers are up and down? Can you still figure out? That's
the risk we run. I mean, for businesses that have planned seasonality or cyclicality, depending upon whether someone's at the shore or a ski resort or wherever, then we have special calculators. I mean, we've done 27,000 advances or 28,000 advances. So we have models for most every type of business. But if the economy just falters and just goes into a bit of a tailspin, then we just collect our percentage.
I mean, you guys, it's a real interesting situation because you're taking a piece of gross, right? And if you take too much a piece, there's no business left.
Correct.
So you really have an incentive to modify the terms as time goes along.
Right. So we go to great lengths to really understand and take sort of a consultative approach with the customers, like Robert would do, right? And he does some very, very similar analysis. And we try to understand what someone's margins are and how much they can afford to pay us without hurting the business. Yeah. The good thing is there are people like Brock, Brock generates demand for people like Robert and I. And Brock Brock can explain his business better than me, but Brock has relationships with thousands and thousands of lenders. And if anyone in the audience came to Brock's site, Brock would know who to point them to. Understand a little bit about their business.
And maybe we should just shift over on that and ask Brock what the heck he does. Oh, by the way, let me just say real quick, Brock is really a star. I mean, he's like Utah Entrepreneur of the Year. His company is, I might have this a little bit wrong, but on the Inc. 100 fastest growing companies in America list, I think you're number 34 last time I checked.
We were. Yep.
Yeah, I mean, they're a rocket ship, and you have an incredible model. You guys have used computer technology to figure out how to match up these guys with banks.
You guys are doing a great job. You want to just keep going?
Okay, tell us about that.
So yeah, it's a pleasure to be here. So our focus, so many business owners out there, they have a dream of the type of business they want to build and grow. And they're busy building their business, whether it be doing marketing or sales or dealing with inventory, and it's hard to keep up on all the different options that are out there. As you can see, there's traditional financing, equipment financing, working capital, purchase order financing. And so what we have done is we've gone out and worked relationships with hundreds of lenders. We're not thousands. I wish we were.
Hey, Brock, one of the things that when we were talking that you said that was really fascinating to me is that there's how many different categories of loans, types of loans that you guys have now?
There's about 20 to 25 different just loan products. And then however many lenders
like what's a loan product? Give us an example.
So an equipment loan would be, when a lender wants to do an equipment loan, they're going to look at the type of equipment you have and how much what's your equity that you have in that equipment. And they're going to fund based on, that piece of collateral. So that's going to be very different than maybe an advanced product, like Steve or Robert have.
Something where you're going out and getting money back on revenue.
Right.
Okay.
Or traditional loan or SBA loan, purchase order financing.
And you guys have created some sort of a matrix between all the different loan types and all the different lenders?
Right.
Okay.
So yeah, so it's free for a business owner. You come in, we gather information about you, then we use that information, match it up to the preferences of these lenders, and then we say, okay, business owner, I'm going to introduce you to Robert, or and I'm referencing Robert and Steve because we worked with them. or I'm going to reference you to Merchant Cash and Capital, and here's your best fit, or here's 5 different options, or 4 different options that you have to get approved for financing. So we make that match, and then we introduce them, and then the two can connect, and it just makes it easier and simple. I don't have to be an expert to know which lender, whether it be traditional or alternative or equipment, or we'll just make it easy for you and introduce you to the right source.
So in my experience, it's a pretty bad percentage for when entrepreneurs go out and go to a lender, try to get a loan, pretty rough territory, like, less than 1 in 10 kind of. What is it in your shop?
Well, about 70% of the business owners that come through the door, we're going to have an option for you. We'll have a lender, whether it be one of these options that we can match you up to, and then you can take it from there, and we'll get to get the financing you need. So instead of business owner walking into a bank and getting declined, and that 90% of the time they're usually going to get declined, we're going to give them options 70% of the time.
Gotcha. Okay. So this is a pretty. First off, does that sound like a good service for you guys? Okay, so you're willing to pay for this, right? No, the answer is no. You always have to say no. You're not willing to pay for nothing. You're entrepreneurs. You're not paying for anybody's. Okay, so what do you guys charge for this?
It's free. So
free, all right.
These guys here foot the bill, right?
Thank you. Yes.
All right, write this down. This company's called Lendio, right? Lendio. I would write that down if I was interested in capital. Yeah. All right, tell us some more about it.
Well, I just want to give a plug for these alternative lenders. As a business owner, the first thing you think about is, I need money, I'm going to go to the bank. And usually that's what happens. You go to the bank, and in some cases they can help you, and hopefully they can. We have a lot of traditional lenders that are great. But usually they're going to focus on businesses that are 2 years in business, 700 credit, good annual revenues, $1 million or plus in annual revenues. And if you don't fit that A plus type, criteria, then, you feel like you don't really have any options. And we work with so many alternative lenders that provide an option for business owners that aren't necessarily in that exact box, that have a different scenario.
How much money have you guys placed? You started 3 years ago, right?
Yeah.
Okay, how much money in 3 years?
We're approaching a billion now. A few $100 million in financing that's come through.
And what's the typical loan size?
About $20,000, $25,000.
Okay, that's amazing. All right, we only got a little time. You guys get your questions ready, okay? You got questions for these guys? Get them ready, because I want to talk to Bob for a second, because these guys have another brilliant thing going on here. The old days, back when I was young and spry, I would go out and go to the bank, and the banker would be a guy I would know, and we would have a conversation. He'd lend to me based on my credit, which didn't have anything to do with my credit score because there weren't any. It was about my credibility as a human being, my character, and it was just a bet by the bank on me personally. You guys have heard of that kind of stuff, and that's gone away, right? That's no longer, except it's back, and Bob does that, and it's amazing how you guys do that. Tell us a little bit about your company. It's IOU, and IOU, just like it said.
Yeah,
tell us about that.
It's IOUcentral.com, and basically the merchant can come online, the small business owner can come online, input an application into our system, understand immediately whether they're pre-qualified or not. There's no cost to do that. If they are pre-qualified and they move into the underwriting section, our technology basically is going out to dozens of different databases and triangulating as much data about that business owner as possible. So
which means you dig into social media?
We're digging into many different
So has anybody ever put anything on your Facebook page you wish you didn't put on there? You're going to find out about it when they dig in.
Yeah, but if you think about the traditional loan source, right? We've said, right? My dad, the only time he put on a tie was funerals, weddings, and going to see his banker. And we've moved away from that. Now, right, you ladies called, right? And now we're moving into online, where people can go online. We don't need bricks and sticks everywhere at a high expense to then just pass that expense along, right?
But listen, man, one of my biggest objections to the whole credit score thing is that you can screw up your credit score with a $15 credit card that you didn't even know you owed the money on. and it blows it up like you just dumped out on $1 million loan. It's stupid how that works. Does this help somebody get around that problem, that you can look into who they are as a person?
It does. So it's not looking at, in the traditional banking sense, you look at every component critically. And so we're not looking at every component critically. We're kind of throwing it all into the blender, hitting the mix button, and pouring it into the glass. And so that's kind of the mentality. By using the technology to do the heavy lifting, we don't have to have an army to handle those applications. So if a bank gets 1,000 applications in a month, they literally have to manhandle 1,000 applications through their system. Our system is leveraging technology to do that heavy lifting. So we need a small squad instead of a full army.
So what do you find stopping people from being successful when they're coming to you?
We fund about 35% of the deals that come through our door. So we're not a perfect fit for everybody. And it's a really cloudy arena out there. I mean, for the entrepreneurs in the room who don't know where to get capital and everything else, I mean, Brock's company provides a great service to help demystify that arena, because it's very confusing. And there was a study out that 29% of people didn't go ask for their bank for money because they didn't think they'd get approved. And that's what makes it, a very big market for us, because the small business owners don't have the access to capital that they really need to move their businesses forward.
What's the typical loan size for you guys?
Our average is about 40 on average. We go up to 100,000. We go down as low as 5,000.
And how little time do I have to be in business?
2 years minimum.
Okay.
Our system looks at cash flow, so we're not looking at coverage ratios and things like that traditional lenders would look at from your tax returns. We're looking at more the real-time health of your business. So we want to know kind of how things are going now. And unlike a bank where you have to have money to get money, that's not necessarily the case. Our algorithm kind of depicts how much the business owner can afford relative to their cash flow.
So I think just to sum up here is that alternative investing has grown from kind of on the far edges of what was known maybe 30 or 40 years ago into an incredibly modern, computerized, broad-reaching, massively effective source of capital for entrepreneurs. I think, frankly, these guys up here, you guys certainly, are more important to providing jobs than virtually anything else that's out there. This is where the rubber meets the road for almost everybody in here who's trying to get capital. So I really want to thank you guys for being here. I want to thank you for just opening up the kimono sort of and saying, here's what the truth is. Thank you two for being here and sharing your story. And we thank you guys. Give them all a big hand, will you? And we'll wrap it up. Nicely done, guys.